Good afternoon, everyone. I'm Brent Hoskins, Executive Director of the Business Technology Association, and I'd like to welcome you to what is today our 141st BTA Building My Business webinar. Today's webinar is titled, Your Business Model is Headed Toward Life Support, Unlocking Innovation to Capture Growth, and it will be presented by Dennis Amorosano, who's founder and president of Dendog Strategy Insights. Now, if you have questions along the way, you can just type them into the GoToWebinar dashboard there on your screen, and I will read your question for Dennis aloud for Dennis to address at the end of the presentation. So with that, let's get started. Dennis, I'll turn it over to you.
It's nice to see everyone, again, it's a good opportunity for us to talk about the business model in the industry, just given the many things that we find occurring in the marketplace. And so before we do that, let me begin by just talking a little bit about myself and my business. So I think as many of you know, I spent 25 years of my career at Canon in the industry, and held a number of different responsibilities within that organization. And since leaving Canon, I'm just in the process now of kind of beginning my own consulting organization, as Brent mentioned, called Dendog Strategy Insights, which really kind of builds upon the many different responsibilities and roles that I held during my career at Canon. And of course, just given the experience I've had in the industry, I'm hopeful that I can bring some good insight to clients and really help clients understand some of the challenges that we're facing in the industry and how they can overcome those. With that in mind, there are a number of specific services that I am offering, including strategic business planning, new business development, content creation and marketing automation, and I'm also working with clients to help them source the most appropriate technology and implement that technology in order for them to gain a competitive advantage. So let's talk about our traditional model. And as I think everyone's aware, certainly no surprise, but our traditional business model in the industry has really been characterized by a number of revenue and profit contributors. And the model, frankly speaking, is really an envy of many industries outside of the office technology space. I mean, as we look at industries in general, most of them do not have a model that provides revenue and profit opportunities beyond the basic sale of the product or service that they offer. Fortunately for all of us in this industry, we've had the great benefit of being able to generate revenue and profit from the sale of hardware, the sale of service, as well as the sale of consumable supplies and parts. And the model has really been, I think, generous to everyone in the industry. And like any business model, of course, we've had some dependencies associated with that model, some of which you can see below. As we know, as the economy goes well, generally the dealer community, as well as manufacturers in the industry, tend to perform well. In past history, as paper utilization has climbed, we of course have seen the businesses associated with the industry do well, and obviously, we've had the benefit of the after-sale service and support, and of course, the more efficient we've been able to get in terms of service delivery, the more profit we've been able to drive in terms of the traditional model. But in general, this model has really helped to build what today is, without question, a very solid industry, and one that, although certainly having some challenges today, if we look historically, it's really been a business model and an industry that's really provided an opportunity for all of us to make quite a good living. Well, of course, the model itself has been undergoing transition for quite some time. So when we look at the traditional model, if we then kind of move from that traditional model to what started to occur in the late 90s and the early 2000s, we saw that software and network services started to enter the model itself. And this is particularly true in the case of software in the late 90s and more so recently in the case of network services, as many dealers and many manufacturers have moved to add managed network services offerings or IT managed services to their portfolios. But the basic business model has really kind of stayed the same, right? So we've still been charging for hardware, we've been charging for service, we've been charging for supplies, generating revenue and profit associated with those components of the model. But of course, as we entered the late 90s and so forth, we kind of layered software and network services into that model, which really gave us another opportunity to expand the business, expand revenue, expand profits. And of course, the revenue and profit dependencies are still very much the same, although I think an important dependency that we saw emerge at this time was the dependency on the types of skills necessary to deliver network managed services and software technologies. And of course, for those of you who have been in the industry a long time, you'll know that if you go back to the mid and late 1990s, those skills really didn't exist to a great degree within either the manufacturers, nor did they exist within the traditional dealer community. And so collectively, the industry needed to build these skills in order to kind of layer in this net new area of revenue and profit. And happily, I can say that the industry really did a nice job, frankly, in making that transition and gradually making the investments necessary to build those skills, such that when we look at manufacturers today and when we look at the dealer channel today, we find that the vast majority, if not all, have quite extensive skills in these areas, which again, really I think bodes well in terms of where the industry and where the overall market is headed. So we saw the model expand in the late 90s, early 2000s, and then we started to see some things shift. And so I'm going to spend the next few minutes and kind of talk a little bit about some of the major trends that are impacting the marketplace and the effect that those trends are having on the current business model, and ultimately what's going to happen with the current model and where do I see things headed. And my thanks to Gap Intelligence for a lot of the information that I'm going to share with you in the next few slides. But one of the things we've seen over the course of the last several years is a general decline in the average selling price for devices. And as you can see from the charts here, whether you look at the chart on the left, which basically focuses on the average street prices for the majority of the hardware technology that dealers and manufacturers are selling today, or if you look at the chart on the right, which is reflective of the decline in pricing from manufacturers to dealers in terms of that same technology, both paint the same picture. Now, of course, there are some exceptions, but generally speaking, what we're finding is that the average selling prices for technology are dropping in the market. And obviously, as that happens, the amount of revenue that we're able to generate is dropping along with it, and so is also true for the total dollar amount associated with the profits in connection with the devices that we're selling. So this is one of the market trends that's been quite pervasive now for quite some time, and if it were just this trend, I would say that our business model is probably not at too much risk. But unfortunately, there are many other trends that are similar in nature, which I'll talk about, which are obviously having a similar effect on the business model. Another one of those trends is actually the shift in the types of devices that are being sold. While yes, it's certainly true that many dealers, many manufacturers have really focused on making investments in selling production printing technology, and that's certainly helped. The fact of the matter is a fairly significant amount of office devices being sold today at one time were A3 class devices, but today generally are A4 devices. And as you can see from the chart here, the percentage increase in the sale of A3 devices is quite significant by comparison, to A3. And obviously, this has the effect of lowering the overall sales revenue associated with these devices. And of course, as we know, A4 devices tend to be such that they require less service, and as a result, the service contracts associated with those devices and that technology are not nearly as lucrative as A3. So again, we're seeing this particular market trend put additional pressure on both the revenue and profit associated with the sale of the engine, as well as the revenue and profit associated with the sale of traditional service contracts. This market shift, the introduction of managed print services, frankly, this is one of my my favorite ones, I guess you could say, in a certain way. I'm not sure who actually came up with the idea for managed print services, but as I think many of you know, and probably many of you in your dealerships have managed print services type business models. Having said that, as many of you know, the basic premise around a managed print service engagement for a client is I'm going to come in as a service provider, and I'm going to reduce the amount of printing that you do, generally speaking, by up to 30%. And I'm going to right-size the number of devices that you're using in your environment, also generally up to 30%. And so when you think about this as a business model, now granted, if you as a provider of this offering don't own all of the pages being printed in that customer's environment, certainly there's opportunity to grow. However, on a longer term basis, the fact of the matter is this particular business model is really not a benefit for our traditional desire to generate long-term consistent revenue and profit. And I think what we're finding in many cases is that while many organizations have provided managed print services, as they get out to year 2, 3, 4, et cetera, in connection with those customer contracts, they're finding that the amount of revenue and profit they're able to generate from those customers in the latter years in those contracts is continually diminishing, which again is putting more and more pressure on the traditional business model. So I'm personally not a big fan of managed print services. I think it's contradictory to what we in the industry have wanted to do. But suffice to say, unfortunately or fortunately, depending upon your perspective, it's a model that's here to stay. And certainly customers are interested in sourcing our traditional technology in this manner. No question, one of the shifts that we're seeing and that we continue to see is a decline of paper. And the information here is from the RISI group, which basically kind of tracks paper demand. And again, if you look at the chart, you'll see that going back to January of 2015, through 2019 here, you'll find that paper demand is basically consistently falling. And this is an interesting trend for a couple of reasons. Number one, when you look at what's happening with content in the marketplace, content, if we were to show a slide on what's happening in content, it would be the actual reverse of this slide. So you'd see a steady line going up in terms of the amount of content that's being produced. So the amount of content that's being produced in the marketplace is huge. However, even though we're seeing so much content being produced, we're seeing less and less demand for paper, which again I think doesn't bode well long term for our traditional business model, and frankly speaking, I think casts some doubt on the general model associated with the industry. And of course, one of the main reasons we're seeing a decline in paper, even with this rapid increase in content availability, is this major push on the part of all companies, whether they're large or small, towards digital transformation. So if you haven't heard this term, certainly you will. You'll hear it more and more. More of your customers will start to talk to you about ways in which you as a service provider may be able to help them in terms of digitally transforming their business. Well, that's a great benefit to a customer in terms of efficiency and business process automation. But one of the things you find in almost any digital transformation project, is a way to either eliminate paper or certainly lessen the dependence on paper in the process. So this is a trend that, frankly speaking, I don't see any change in the nature of this trend. And as this continues to decline, without question, it's going to put continued pressure on the traditional business model that we've all enjoyed for so many years. Some other market shifts, again, that are impacting the traditional model. One is longer parts life. So I think you're probably all seeing this to some extent as well. And what's interesting here is that, obviously this particular trend is both good and bad, right? So from the perspective of a manufacturer, this is impacting manufacturers' parts revenue and profit without question. And so what we see is that it's becoming more and more challenging for manufacturers to maintain the revenue and profit associated with their sale of parts, just due to the fact that those parts are lasting longer. Now, from a dealer perspective, obviously, it's a bit different. Provided that you're not modifying your service contracts to customers, this is a benefit to you as a dealer. But I think the big point here, and this is also true with remote service delivery, is that the customer expectation around service for our traditional type of technology is changing. And it's changing because parts are lasting longer, devices are more reliable, devices can be serviced and managed remotely. So customers are actually expecting to pay less for service than what they've traditionally paid, just given the changes in technology and parts life. And again, I don't know that we've seen a huge amount of impact in terms of service pricing yet. But I think when we look at these types of trends in the marketplace and the impact of these trends, I don't think there's much question that more and more of our customers at the end market level are going to begin to demand lower service pricing based upon what's happening in terms of both longer parts life and using the Internet of Things as a framework for providing remote service delivery. And of course, the same can be true. Same can be said for increased toner yield. So of course, on a CPC contract, if you're a dealer, this is a great benefit. But in cases where you are selling toner independent of a all-inclusive contract, obviously, just given the nature of page volumes today and increased yields, chances are you're not selling as much of it as you once were. Not to mention the fact that we see so many tools now emerging in the marketplace from a software perspective that basically help end clients lessen the amount of toner they're laying down on the page, which obviously has a significant impact on the revenue and profit associated with this part of the traditional business model, not only for dealers, of course, but for manufacturers as well. So those are some of the major trends that are really impacting the market. And again, unfortunately, those trends are not conducive to the long-term viability of the business model. And when we look at these trends and we look at the impact on the players in the marketplace, of course, we have to look at both a macro level, and as you can see here, I'm kind of referencing manufacturers in that regard. And we also need to look at a micro level, which is really the traditional dealer channel. Because there obviously are some differences here, but certainly many of these trends are going to impact, both manufacturers and dealers alike. And again, when we look at what's happening in terms of hardware revenue, when we look at hardware profit, I think we're finding the same is true at both the macro and the micro levels. And certainly, if we look at it from a manufacturer's perspective, hardware revenue is declining, and in many cases, and of course you can see this in the financial disclosures that all of the manufacturers are making on a quarterly basis, you'll find that their hardware business in many cases is break even at best. And frankly speaking, quite a few of the industry players are losing money in terms of their sale of hardware. So it's having a huge impact on their businesses. And as I mentioned, although its impact is maybe to a lesser extent in the dealer channel, the impact is still quite similar. Of course, the market players, the manufacturers in particular, well, what are they doing to try to overcome that? Well, they're trying to sell more engines, right? They're trying to capture more market share. It's dubious, for example, as to whether or not that strategy is one that can be viable long term. Moving to service, of course, we're seeing the same kinds of things play out. So we talked about parts revenue already and the impact that that's having at the manufacturer level. But we're also seeing considerable pressures on service pricing across the board. And so whether it's the impact at the manufacturer level or whether it's the impact to dealers who are competing with each other in the marketplace, we're seeing, again, more and more pressure be applied to traditional service pricing. And frankly, from my perspective, I think that's only going to get worse, particularly as we see customer expectations around service beginning to change, and we see more devices coming into the marketplace that ultimately require little, if any, service, frankly. So unfortunately, I don't think the long-term projection for the market bodes well here. And again, the same is true on the toner side. Although obviously this is dependent somewhat on the manufacturer. Those manufacturers who are having success in capturing market share, they certainly are having an opportunity to see the revenue from toner grow. That being said, there aren't a lot of players on the manufacturer side who are capturing market share, frankly. So I think what you're finding here is that much the same as with hardware, many of the manufacturers are really struggling to try to break even here and maintain their year-over-year revenue associated with toner. Now, having said all this, what's the impact relative to the business model? Well, again, I think if we look at it on a macro level and we look at manufacturers, and this was certainly my view when I was working for a manufacturer in the industry, I personally felt that the economics of the current business model were really at significant risk, and that as a manufacturer, we needed to really begin to take some significant action to address that. And I do think the risks are significant at the dealer level, albeit I would say that the model is not quite in as dire a situation at the dealer level. Having said that, I think for those of you obviously who are seeing some of these market trends we talked about earlier play out, it doesn't take much, I think, to try to project forward as to where things are headed and come to the recognition that the current model is probably not going to be one that's going to be a long-term winner. So again, if we look at where we are now, as I've indicated here, the health of the model, I would say, in many ways is starting to fail. And again, it's been a great model. It's been the envy of so many industries. But like all good things, at some point, the vast majority of them do come to an end. And I think it's true in connection with our traditional model as well. And so, again, if we look at what's happening at the manufacturer level, as I've already discussed, most of the manufacturers are heavily pushing for market share as a way to try to stem the bleeding, if you will. They're migrating to production technology and color as a way to offset some of the loss of revenue and profit. I think you're also seeing this across the industry. The industry, in some ways, is shrinking. The number of people in the industry is diminishing. It's very likely, I think, we're going to see more consolidation amongst the manufacturers in the industry over the course of the next several years. Service delivery, good news, is improving. I mean, that's a plus. But again, the manufacturers are really pushing that for the basic efficiency gains, and the fact that the more efficient they can be in driving service, the more profit they can generate, and the better they can manage their costs. We haven't seen a lot of this next, kind of trend, if you will, from a manufacturer perspective, but I think you will see more and more manufacturers are going to begin to think about how do they leverage e-commerce as a primary means of driving the sale of hardware technology. It only stands to reason that as manufacturers look at ways to extract cost from their business models, that e-commerce becomes a method for them to do so. And I think you're going to see this initially at the lower end of product portfolios, but I think longer term, e-commerce is going to be something that manufacturers want to try to use as a viable way to reach customers. And of course, dealers need to think about that in terms of the types of technologies that you're sourcing from your manufacturing partners. And of course, finally, I think important to note is that more manufacturers are looking at ways they can monetize existing services to dealers. So what do I mean by that? So, traditionally in the marketplace, most manufacturers haven't charged for things like training or technical support or things of that nature. I think if the economics of the current model continue to move in the direction they are, don't be so surprised, frankly, if manufacturers start to move in that direction. And again, I think they have no choice but to do that in order to make up for some of the challenges that we're seeing based upon the market trends we've talked about and the financial impact on the current business model. And of course, on the dealer side, again, a lot of these things are consistent, right? So obviously, dealers are continuing to push for market share. We've seen private equity, come into the marketplace, which is having some interesting impacts on where dealers are headed. One thing, again, we're also seeing is dealers are now starting to also look at, well, how can we drive even greater service efficiency as a way to lessen the negative impact on the revenue and profit associated with the service aspects of the business model. One advantage dealers have, frankly, that manufacturers don't is geographic opportunity. And I talk about that in terms of broadening geographic reach. And so, again, most dealers today, with the exception of some of the larger national dealers, are generally located in a particular geographic region. And so dealers do have the ability to expand geographically, and as dealers do that, it does give them opportunity to continue to grow revenue and profit overall. So for manufacturers, really, most of them are national to begin with, so they really have that benefit. The only thing they can do in that case is try to gain share. And again, one of the things I think the dealer channel has done considerably well is they've layered in on services and software. Most of the manufacturers in the marketplace have tried to do that, but frankly speaking, very few have been successful at it. Not that they won't continue to try, but the reality is that the dealer channel in particular has been much more successful in layering these kind of services into their offerings, and in doing so, themselves another opportunity to generate different and net new types of revenue and profit. So where are we headed? As I think you can probably tell, my hypothesis, having spent 25 years in the industry and being one who is, continually following the industry, is that the model is going to fail. Obviously, I don't have a crystal ball, so it's hard to tell exactly when that's going to happen. But, if we look at where the model is today, and if we look at the market trends we're seeing, and we're looking at some of the market accelerators, frankly, like artificial intelligence and machine learning and things of that nature, which I personally think are going to speed up this market transition. My sense is that the business model as we know it is going to look very different in not that far a time from now. So I wouldn't be surprised in the next 3 to 5 years if we're looking at an industry that is operating under a model that's quite different, frankly, than the one that we've all been accustomed to. And I will say that in my time working in the industry and working for a manufacturer, I mean, this frankly is one of the things that kept me up at night. So, when I was involved in looking at strategic business planning and how was I going to build my business plan and try to continue to grow revenue and profit in connection with the business units that I was responsible for managing, one of the things I was consistently looking at is how do we change the business model? How can we drive innovation as a way to do that, such that we can gain a competitive advantage versus our direct competitors, but also provide our channel partners with an ability to leverage that model and drive competitive advantage at a local market level as well. And That hasn't happened to a great degree yet, but I think those days are coming. And I say that because you're really now starting to see some new models, beginning to emerge. And I think what you're going to find is that, like a lot of industries that have traditionally sold products, physical products, those industries are going to move to selling not only just the physical products, because I don't think that will go away, but they're going to look to start selling services. And as you start to migrate to a service-oriented sales approach, it by its nature, it kind of changes the way in which you engage with your customer and transact those businesses. And we're already seeing this on the software side of the business, right? So for many of you, I'm sure you're selling software, you're selling IT managed services, and the business model that you use to sell those things is considerably different than the traditional model that you've used to sell, hardware and the service and aftermarket associated with that hardware, right? So, obviously we have all kinds of models around software, in particular software as a service, which we see is quite prevalent today. This is especially true in connection with cloud-based software technology, but I would tell you that more and more we're finding that even software providers who don't provide cloud-based solutions, they're also moving to a software as a service business model, even for software technologies that they deploy at a customer's location or on-premise. And again, these models, software as a service models, are generally annualized subscriptions. So a customer is, in essence, paying you for an annual subscription to that service, and you as a provider of such service then are ultimately hoping that customer will get great utility from that service, and then will continue to renew that annual subscription year after year after year. And of course, we're now just starting to see this make its way to our traditional industry, and so I think many of you probably have heard the terminology print as a service. And in many ways, print as a service is a hybrid business model that takes into account the provisioning of traditional printing hardware to customers, but provisioning that hardware to a customer based upon a subscription-based or an annual subscription-based model, where in essence what the customer is paying for is not so much the hardware itself. It's in essence, the customer is in essence paying for the service that's provided by that hardware. So again, these are the models that we're starting to see make their way into the marketplace. Now granted, the complexity of offering hardware-related products under an annual subscription model is a little bit challenging, and I think that's one of the things that's made it slow to take off. But I do believe that within the not-too-distant future, you're going to see more and more manufacturers providing those kinds of offerings, and I think you're going to find many of the dealers in the marketplace are going to offer those types of models as well. So with that said, I mean, there really are some things that I think you need to consider as a dealer relative to what's happening in the marketplace. And I've kind of broken these down into a combination of business modeling as well as some of the operational considerations that have to go with the business modeling exercises. And one of the things about business modeling in general is that, particularly in the industry right now, is that I do believe that there is a first-to-market advantage that is available for either a manufacturer or a dealer who is able to successfully drive a different model associated with the way in which their customers will traditionally acquire the hardware and software technologies that are being sold today. Again, most of the channel is selling using the traditional model. Most manufacturers are doing that as well. So to the extent that you can gain first mover advantage, I think you can make it more difficult, frankly, for your competition to catch you, particularly in cases where you make acquiring the offerings that you bring to market simple for the customer, and that's key, right? One of the things we know about the historical business model in the office equipment space is that, the model can be complex, right? It has multiple components. It has a hardware component. It can have a software component. It obviously has a service component. It has an aftermarket component. One of the things our industry, I think, has been hampered with for many, many years is how do we get billing correct, right? So one of the reasons billing is hard is because the model's been complex. So again, to gain first mover advantage, it's also important that we think about ways in which we can really extract complexity from the business model for the customer. I think if we do those two things, we can really gain competitive advantage. Other thing that's important in any kind of business exercise is that we want to make sure that the model is repeatable, right? Thus an ongoing stream of revenue and profit. So, and that's why annual subscription-based models have become so popular in the software area. If you think about historically what's going on in the software industry, software companies basically sold their software to a client. Customer paid once for that software, and then the customer basically would subscribe to annual maintenance associated with that software. And when you look at the economics associated with that, it was great when you initially sold the software, but in the outlying years, you were really only collecting a small percentage of the original price of the software in the form of maintenance. Well, that's changed dramatically. So what's happened now through an annual subscription model is that, yes, the customer's upfront cost is less, but if that customer really is using that software for mission-critical business work, you'll find that, generally speaking, they're consistently renewing that year after year after year. And what most of the software manufacturers have found, and by the way, this was true when I was at Canon, running Canon software business as well, is that usually within 24 months to 36 months, I was reaching a point where the sale of software under a subscription model was providing more revenue and more profit than if I had sold it just on a one-time basis. And so again, we want to look for ways to drive that kind of repeatability associated with the models. Of course, one of the other important things, and we talked about this earlier, is we see what's happening with page volume. And again, content is growing like crazy, but yet pages continue to decline. So again, there's nothing on the near-term horizon that tells me that that's going to change. If anything, I think pages are going to decline at an even faster rate as technology continues to improve. So think about what we do in our industry, right? We print. So the lifeblood of our industry in many respects is dictated by the pages coming out of devices. Well, how do we build a business model then that insulates us from the page volume trends that we're seeing? So it's important that we do that. And an important thing for dealers, frankly, when we think about business modeling is, and I know many of you may be doing this today, but I would venture to guess that not a lot of you are, but think about it. You're selling hardware. You sell software, you sell network services, right? You're selling those things to the same client. What if you built a business model whereby the client could source those things under the same business model? Wouldn't that be much easier than the client having to basically source those offerings from you using 3 or more separate business models? So I think the dealer channel in particular has an opportunity to consolidate these models and really make it easy for the end customer to do business with you. And again, if you do get first mover advantage here, I think you're going to be able to create a nice competitive advantage for yourself versus others you might be competing with. And of course, when we look at the business models we want to build, we have to think again, how do we operationalize these business models? It's one thing to create a great business model, but if we can't operationalize it, it doesn't do us much good, right? So again, our model has to lessen our selling and delivery costs. That's critically important. We have to make sure we understand the impact that the model is going to have on selling and delivery costs. As I talked about earlier, particularly as we're looking at continually placing net new devices in the marketplace, how do we leverage the Internet of Things, and how do we drive more focus around remote service delivery? And in doing so, improve the efficiency through which we can drive service, thereby lessening cost for service delivery and maximizing profit of our service contracts to the extent those service contracts will continue to be available to us as the market continues to move. One of the things I've often thought is that we have an opportunity to monetize device uptime, especially in cases where those devices are being used for mission-critical business applications, like in financial services, for example. And again, as the types of devices we sell become more intrinsically connected to customer workflow, I think what we find is that if the device fails, the customer's business stops. So that being the case, then customers then are really interested in uptime, right? So and as we know, our device technology today, kudos to the manufacturers, they're making these devices more and more reliable. So why not think about charging for uptime as part of our service contracts? Again, we're going to have to do something to overcome the pressures on service revenue and profit that we're seeing in the market, and trying to monetize device uptime may ultimately be a strategy to do that. Again, business diversification is key, and as I mentioned earlier, one of the services that I'm providing to clients is really looking at new business development. We talk about innovation all the time, but again, I think this is something that has to be ingrained within your culture. How do you continually diversify your business so that you're not ultimately disrupted in terms of your current business by someone who comes in doing something different than you're doing today? And again, critically important, when we build the business model and we've built a business model that's repeatable, we need to make sure that we're compensating our organization to drive that repeatability. So many times, we see situations where we have a business model, but the personnel inside our organization are incented in a way that's not conducive with the business model that we've built. So we want to make sure we align these things. And if we do that effectively, again, we can kind of get everyone in the boat, kind of rowing the oars in the same direction, as I like to say. And when we do that, we have a much better chance of long-term success. So again, a lot is happening in the industry. There isn't any question about it. It's an exciting time to be in the industry, no doubt. But it's also, I would say, given my own experience in the industry, I would say that it's one of the more challenging times, frankly, to be in the industry. And with the continued speed with which new technology is making its way into the market, and the financial pressures that we see both at the macro and micro level in the marketplace, we're going to see a lot of things happen over the course of the next several years. And I think one of those things is going to be a dramatic shift, frankly, in the traditional business model that we've used. And personally, I'm excited about the shift, and I think for those of you who embrace that and look at ways in which you can implement that in your businesses, in the short term, you're going to find that you're going to have a competitive advantage that you can utilize, hopefully, to help you grow at the expense of some of your competitors. So again, I thank you very much for taking the time to join me today. I hope you enjoyed the content. As Brent mentioned, I'm more than happy to answer any questions that you might have. And if you did want to reach out to me, you'll find my contact information on the slide here. So by all means, please feel free to send me a note if you don't have a question now and something pops into your mind at a later date. More than happy to answer any questions. So Brent, with that, let me turn it back to you.
All right, very good, Dennis. Thank you very much for your presentation and your willingness to share from your many years of experience and your insight. Very good information. I learned a lot. If those of you, as Dennis just mentioned, if you do have a question for him, if you could type it in on your screen, then I'll read that aloud to him, and I'll wait just a few moments as he's doing that, or as we're waiting to see if you've got any questions. In the meantime, I will mention that the slides are available on the BTA website. They are saved as a PDF, but you're able to download them. You can go to the BTA website, so bta.org, and then /BMB archives, BMB archives. Now, BMB as in building my business. While you're there, I would encourage you to take a look at the archives of recordings of past webinars. I mentioned at the top of this webinar that we've had 141, or this is our 141st webinar that goes back to January of 2008. Over 100 of those have been recorded, and those recordings are available to you on the BTA website as a resource as part of membership in the association. So you can peruse the list of topics, and you may find that you want to re-listen to or listen to for the first time some of those webinars. I do not see any questions on the screen. As Dennis mentioned, his email address is there on the website or on the screen. So if you have questions you want to ask Dennis offline, please do so. I'd encourage you to also go take a look at his website and learn a little bit more about Dendog strategy. I've known Dennis for many years. I hold him in high regard. He's been very instrumental in, certainly things at Canon, but, as a key player in the industry. I've had the privilege of interviewing him several times for articles I've written for Office Technology Magazine through the years. So again, Dennis, thank you very much for presenting today.
Sure, my pleasure, Brent. Thank you, and thanks for having me. And again, if anyone has any questions down the road, feel free, just give me a shout. I'd be more than happy to provide you with input.
All right, very good. Thank you for that. And as you are logging off the webinar today, you'll see a little question or a brief survey pop up on the screen. It'll take you all of about 1 minute. If you wouldn't mind completing that survey, we would greatly appreciate it. This helps us plan for future Building My Business webinars. So for that, we will go ahead and end the webinar for today. Say goodbye for now. We thank you for your membership, and soon we will be announcing the October Building My Business webinar through our website, social media, and otherwise, and look forward to your participation next month. So again, goodbye for now.
Thank you.